What's up, everybody? This is Sunko, the Korean Bro. Today is 2022, November 11th. And let's look at economic calendar first. Um, okay. Last night we had initial jobless claims and CPI uh, events. And initial jobless claims actual point was bit larger than forecasted. Mm. It's obviously not a good sign for economy in general, but then somehow most of stock is having a upward trend. I think it's because people think mm, inflation is about to disappear. Not disappear, but like uh, it's in a state where people feel it's stable than before, and that's what Federal Reserve may think too. So let's look at articles of tonight. First, what I'm gonna look at is motleyfool.com. Let's see what this says. And yeah, let's read this first. Why it's finally time to buy Neo stock. This beaten down Buffett stock is a buying opportunity. Nvidia devises a new chip for China that passes U.S. export controls. One super stock to buy hand over fist, according to 91% of these Wall Street analysts. Warren Buffett's latest $1 billion buy brings his total investment in this stock to $63 billion in 4 years. Uh, mm, See, something big is happening. Hmm. Upward numbers up really different. I mean, overall, I see 11% increase, 16% increase, and 27% increase. Hmm. Let's first read about what's up with stock market. Of course, if I just start reading about Motley Fool, I'd get to know what stock I have to invest. But on some level, I want to know what's happening on a macroeconomic level. So let's read about this first. Inflation data raises doubts about whether Fed will stay the course. Morning bluff. Okay. Stocks and bonds had an especially bullish reaction to new data out Thursday, showing that inflation continues to moderate after reaching a 40-year high over the summer. Okay. The Dow, Nasdaq, S&P 500, Russell 2000 each had their best day since the 2020 pandemic lows. Okay, the 5 and 10 year Treasury notes saw their biggest one-day drop in yields. Since then, Fed Chair Ben Bernanke ramped up quantitative easing back in March 2009. A casual observer could be forgiven for thinking the Fed has whipped inflation. Casual observer could be forgiven for thinking the Fed has whipped inflation. While the US is far from its 2% inflation goal, inflation eased more than expected last month. Okay, that's the point. Uh, Last night we had really mm, upward spike last night. It's spike that I haven't seen for the past months, like 10%, 20%, 30% up. Uh, Pretty much like a lot of companies. And so here it goes. Inflation eased more than expected last month. Okay. The headline consumer price index rose 0.4% in October versus headline consumer price index rose 0.4% in October versus expectations of a 0.6% gain, while the year-over-year measurement ticked down to 7.7% from a 7.9%. Taking out food and energy, core inflation also rose in October, but less than expected. Will this be enough for Chad Fed Chair Jay Powell to change his tune and slow the pace of interest rate hikes? So, people have high expectation. Will Fed change his tune? Mm. Last month, it seems that inflation eased more than expected. So, will he still raise interest rate next month? Will this be enough for him? Echoes of a Powell pivot could be heard across the Twitterverse as stocks rocketed higher across every sector and industry. Although inflation remains stubbornly high, the better than fear CPI prints inspires some investors to start taking risk again. Optimism throughout 2022 have fueled outsized market moves such as these. So far, market participants have judged incorrectly. As new lows in the major indices have followed every major rally. Powell, for his part, has pledged to raise interest rates. Okay, we'll see how it goes. Um, we'll see the results next month, second of next month. And he also has pledged to raise interest rates, even if it hurts parts of the economy. At his last press conference, Powell flat out said he's more concerned with entrenched inflation than he is with the risk of the Fed continuing on its hawkish path. The main danger being a recession. That result hasn't stopped investors from hoping that the Fed will stop rate hikes sooner rather than later. Arthur, founder and CEO of the Macro Compass, told Yahoo Finance on Thursday that bonds are pricing in the lower terminal Fed funds rate, or the rate at which the Fed stops hiking. Okay, so something is signaling. that Fed stops hiking. Okay. Bonds are pricing in a lower terminal Fed funds rate, or the rate at which the Fed stops hiking. He also highlighted that bond volatility is dropping like a stone and credit spreads have tightened. These signs all nudge investors to take on more risk, at least in the short term. With this inflation print, Pekatilo said, investors believe less and less the Fed will stay the course. Okay. Hmm. Okay, and about U.S. stocks. U.S. stocks continued dramatic ascent in futures trading ahead of Friday's open after deceleration CPI inflation data ignited the most intense rally on Wall Street since early 2020. Futures tied to S&P 500 rose 0.5%, while futures on the Dow Jones Industrial Average added 165 points, or about the same percentage increase as the S&P. All three major averages skyrocketed Thursdays, each recording their largest one-day advances since the rebound from the throes of the COVID crash more than 2 years ago. Outside moves were catalyzed by latter October consumer price data that fueled bets the Federal Reserve may halt the tightening of financial conditions as soon as early next year. Overall, the report suggests that peak inflation may finally be behind us. Though inflation may remain elevated for a while, BNY Mellon Investment Management head of U.S. Macro Sonia Mask said in a note Thursday. However, it is also important to not overemphasize one report for inflation and policy trajectory, she added. So, uh, well, something is signaling that interest rate hike um, can possibly be changed. I mean, Powell could possibly tune his policy, but we have to be cautious because we cannot just be thinking like he will tune and he will change his thoughts. Uh, we cannot just judge like that, you know. So here she says it is also important not to overemphasize one report for inflation and pulse trajectory. Yeah, here it is. Despite the moderation, many strategists assert the excitement is premature, with Federal Reserve's officials still poised to tighten further. After Chair Jerome Powell said last month, the policymakers still have some ways to go on restoring price stability. Okay, so it's a premature move. If I buy stocks at this point, it's a premature move because Fed has officially said that it's going to mm, raise interest rate um, for sure, even if it hurts economy. So the Fed's extreme data dependence combined with the fact that economic data will only show the real-time labor market and inflation slow down over the lag. Increase the odds of an over-tightening action, Gregory Deco, EY partner, chief economist said in the email comments. Meanwhile, Nicholas College of DataTrack points out another reality. Although inflation trends lower once it peaks and starts to decline, as in 1970, 1974, blah, 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 that Downshift typically comes with recessions, and there are no exceptions rule. Turmoil persisted in crypto world as the FTX debacle unravels, with former crypto hero billionaire Sam Bankman-Fried now also reported to be under investigation by the U.S. Securities and Exchange Commission as his exchange seeks a cash bailout. Something a lot is happening, uh, indeed, with Bitcoin. This is interesting. Former crypto hero billionaire Sam Bankman-Fried now also reported to be under investigation by the U.S. Securities and Exchange. It's interesting. It's something that I didn't know. Hmm. Hmm. Anyway, hmm, let's go back to Motley Fool, okay? Why it's finally time to buy NIO stock. NIO stock has plunged in recent months on fears of slower growth. However, the company expects car deliveries to rise significantly in the fourth quarter. It is also planning to launch several new models in 2023. NIO? Okay. Let's look at NIO first. Hmm. Um, The market's fear about NIO's growth are overdone. With fresh COVID-19 restrictions gripping China, expectations from NIO have nosedived in recent weeks. NIO is one of the dominant players in China's hot electric vehicle market, and the company had to suspend operations at a couple of factories last month as lockdowns were imposed. Okay, because of policy in China, they had no choice but to suspend operations. Okay, fearing NIO's production and deliveries to take a beating, investors dumped the EV stock. NIO shares lost nearly 33% value in just 1 month through November 9. One day later, NIO proved its critics wrong. The EV manufacturer will beat a third quarter revenue estimate and see significant growth in car deliveries in the coming months. And NIO's growth plans are even bigger. So if you've been watching NIO stock plunge this year but haven't pulled the trigger yet, it's finally time to buy the EV stock. Okay. Backed by 29% higher deliveries, NIO generated roughly $1.8 billion in revenue. In quarter third, up 32.6% year over year. High battery cost, however, continued to be a chink in the armor, and that hurt NIO's vehicle margin, gross margin, yet again in the third quarter. High battery cost. Uh, to sum up, their revenue increases year over year, although they have a problem. Mm, Although they have problems supplying vehicle because of a policy in China, they suspended operation for a while. But then, plus they have a cost problem, which is high cost of battery. Mm. Oh, but here it is. There's a glimmer of hope here as well, though. Neo's third quarter margins were relatively flat sequentially, meaning they didn't deteriorate further, unlike what the markets expected. In other words, the raw material supply shortage that has been a major overhang on Neo stock for several quarters could now be mostly behind it. Okay, so raw material supply shortage has been a problem, but it's not a problem anymore. Okay. The biggest takeaway, though, is Neo's outlook for the fourth quarter, which should allay fears about the company's growth. And Neo has big plans beyond 2022. Stepping on gas, what makes Neo stock a compelling buy now? Okay, let's get to the bottom right now, okay? Neo is planning to launch five new models in 2023, okay? Five models. Is still eyeing a mass market brand and expect its gross margin to hit 20% to 25% next year if battery costs fall. The company has a lot of cash, so it has a leeway to invest billions of dollars in research and development of new models. That's what the company plans to do to remain a prominent player in the world's largest EV market, China, even as it expands its footprint in Europe. Europe is also the only international market NIO has ventured into so far. So the markets may expect NIO to grow even faster. Mm. But NIO's confidence in delivering a record number of vehicles and growing its revenue by 75% to 94% in the fourth quarter, despite macro headwinds, is nothing to sneeze at. That alone should reinstate investors' faith in this EV stock that has slumped so dramatically to prices last seen more than 2 years ago. So NIO will have will launch five new models in 2023, and they've got a lot of cash. Mm. So they got a lot of money to spend for research and engineering and development of new models. So, okay, NIO. We will see about that. We'll see about that next month. Okay. Hmm. Next. This beaten down Buffett stock is a buying opportunity. Floor and Decor is demonstrating strong growth and increasing profits. It has a huge market opportunity and a plan to capture market share. At this low price, its valuation looks compelling. Floor and Decor is demonstrating. Okay. The market is having a year of reckoning, and a few stocks are unscathed. While investors bemoan lost portfolio value, the reality is that many prices were inflated before, and the down market is creating more realistic and reasonable valuations. That's why a mild down market is called a correction. It doesn't feel good, but it does create compelling entry points for great stocks that have loads of potential. Okay, that have loads of potential. Floor and Decor Holdings is a recent Warren Buffett stock that's down 47% this year. And it looks like an excellent buying opportunity. Okay, it's also one of Warren Buffett stock. I get it. Floor and Decor Holdings. Floor and Decor Holdings. Floor. There you go. What does it do? Floor and Decowitz operates flooring superstores, demonstrated phenomenal growth over several years. It has continued straight through 2022 despite the gloomy economy. Okay, sales increased at a compound annual growth rate of more than 25% from 2017 to 2001, and is likely to post a similar increase this year. So far, sales growth was strong over the past 3 quarters. Okay, it's profitable as well, and adjusted earnings per share increased from $0.60 last year to $0.70 this year, beating analyst expectations of $0.66. Tons of room for growth. Why? There might be substantial reasons to invest in companies that are already built up, but getting into a stock that is still in its infancy, is growing quickly and is already profitable is a real opportunity. That's where Florida Daco finds itself right now. Okay. Why? It's not surprising that Warren Buffett recognized this opportunity and added share to his holding company. The company operated 178 stores as of the end of the third quarter, with plans to open 13 more in the fourth quarter. It identifies a market of 500 stores over the next 8 to 10 years and is capturing the market. But it's not just new stores, a business that engenders all of its sales growth from a new stores wouldn't look viable for a long term. Hmm. Uh-huh. I don't know much about furniture industry, so of course, I can look through information about this company, but I wouldn't do it because I'm not really familiar with it. I would just spend my time reading about IT company instead. Okay, Nvidia devises a new chip for China that passes U.S. export controls. Okay, let's see. Nvidia has reportedly modified its 800 chip to clear sales restrictions to China. The new chip called the A800 is already being marketed in China. The new chip could help avert a disaster for the company's important data center segment. Mm. It once went down to 115 and now it's 159. But I know it's a good opportunity right now. But instead of mm, going in right away, I'll just wait because next month we'll have another interest rate hike. So and plus Nvidia, just like I guessed, although they have restrictions, although they have license issue, they found their way to avoid it, and they find a way to they figure it out anyhow, uh, to sell their products to China, right? A repurposed design could help the data center sales foster again flow freely. Okay. A repurposed design. Okay. Top data center and AI chip stocks like Nvidia took the news of expanded sales restrictions to China poorly in October. Already dealing with a fall off in consumer electronics spending, Nvidia's upward trajectory had thus far remained intact for the important data center segment. But with the US looking to hobble China's semiconductor industry and in turn its military by cutting off the country from AI circuitry and advanced equipment used to manufacture them, Nvidia's marquee moneymaker was also suddenly losing shaky. Was suddenly looking shaky. How much is at risk from the China bans? So because of China binge, they are now facing difficulty. But how risky is it? Oh, that's the main point here. Hmm. Let's get to the bottom here. Enter the NVIDIA A800. So that's the product that they have. Let's see. NVIDIA just proved it's a far from helpless in this situation, though. Engineers were apparently hard at work behind the scenes because the company just made a new chip called the A800 available for customers in China and Hong Kong. NVIDIA says this new data center design meets the US threshold for maximum data center computing power. A handful of distributors in China already began marketing the A800. Essentially, NVIDIA made a scaled down version of the A800 data center chip that throttles the computing and chip to chip communication speed of its systems used for AI and other high performance computing. While this A800 wouldn't provide the same cutting edge spreads in AI computation as the A800, A100, or upcoming 800, it could still get the job done. The question now is whether NVIDIA's customers in China and Hong Kong will go ahead with purchases. Okay, so NVIDIA has a new product. Its name is A800. This product may not be as good as the ones they had provided before, but it can have their job done. It can get the job done, so it'd be no problem. But the question now is whether NVIDIA's customers in China and Hong Kong will go ahead and buy it. Mm, okay. One super stock to buy hand over fist. Okay, what is it? Mm, what is what? One super stock to buy hand over fist. According to 91% of this Wall Street analyst, Bill.com nearly doubled its revenue in the first quarter of fiscal 2023, despite the slowing economy. The company serves 420,000 business customers, and it could process more than $250 billion in transactions over the next year. 91% of analysts tracked by the Wall Street Journal gave Bill.com stock the highest possible buy rating. Bill.com. The technology sector is in the throes of the worst bear market since the Great Recession in 2007 and 9. The Nasdaq 100 index, which is home to some of the largest tech stocks in the world, is down 30.4% so far in 2022. Hmm. Hmm. Anyway, this is IT company as well, but I don't feel like reading this one at this point, so I'm just gonna skip. Okay. Cloudflare CrowdStrike. Triple-digit returns for this growth stocks. Cloudflare management says the company company could grow revenue at 38% annually for the next 5 years. CrowdStrike's powerful artificial intelligence engine gives the company an edge over other vendors. Investors should never put too much weight on near-term price targets set by Wall Street analysts. Economic uncertainty in 2022 triggered a gut-wrenching downturn in the stock market. The S&P 500 is down 17.8% from its previous high, and the Nasdaq Composite slipped 31.2%. Hmm. Let's look at Cloudflare first. CrowdStrike Cybersecurity. Cloudflare. Cloudflare operates a global cloud platform that improves the performance and security of business-critical applications while eliminating need for costly on-site network hardware. Well, it's revolutionary, I guess. While eliminating the need for costly on-site network hardware, they can um have with cloud platform they can do pretty much everything. They don't need to have hardware. Okay. In a nutshell, Cloudflare makes the internet faster and safer, and its platform architecture and capacity for innovation afford the company a significant competitive advantage. Cloudflare interconnects with every major internet service provider and cloud vendor. Its servers are positioned around the world to maintain data connectivity within 50 milliseconds for 95% of internet users worldwide. As a result, Cloudflare is the fastest cloud provider in North America, Australia, Japan, the majority of South America and Europe. But the company also differentiated itself through product innovation. Last year, Forrest Research named the Cloudflare Workers the leading edge development platform, citing a stronger current offering and a stronger growth strategy than any rival. Financially, Cloudflare reported impressive results in the third quarter. Its customer count increased by 18% to 156,000, and the average customer spent 24% more over the past year. In turn, quarterly revenue climbed 47% to $254 million, and the company generated $43 million in cash from operations. As a point of a clarification, that meager cash flow may worry some investors, but given the massive market opportunity, management plans to run the business near break even for the foreseeable future. Anyway, the point here is cybersecurity company CrowdStrike and Cloudflare both got really good potential, and within 5 years, uh, profit is guaranteed. Hmm. Okay, I get it. Last but not least, okay, I wanna read this article for the last time. Okay. Musk warns Twitter bankruptcy possible as senior executive. Okay. Elon Musk, in his first address to Twitter Inc. employees since purchasing the company for $44 billion, said that bankruptcy was a possibility if it doesn't start generating more cash, according to people familiar with the matter. The warning came amid a tumultuous Musk reign at the social media company, a 2 week period in which he has fired half of Twitter staff, ushered out most of the top executives, and ordered the remaining employees to stop working from home. One executive who, until Thursday, had emerged as part of Musk's new leadership team, Yoel Roth, departed. People familiar with the situation said. Another, Robin Willer, also reigned, but Musk persuaded her to stay on, said some of the people who requested anonymity to protect personal and professional relationships. While the buyout has removed Twitter from the scrutiny of public markets, Musk loaded the company with almost $13 billion in debt that's now in the hands of 7 Wall Street banks that have been unable to offload it to investors. Confidence in the company has eroded so rapidly that even before Moscow bankruptcy comments, some funds were offering to buy the loans for as little as 60 cents on the dollar, a price typically reserved for companies deemed in financial distress, Bloomberg News reported on Thursday. So things are not looking great ever since Musk uh, Musk took a leadership in Twitter. Twitter has gotten a lot of trouble. He fired a lot of staff. He fired a lot of executives, and it's in debt now. So Musk. That's why Musk mentioned about bankruptcy of Twitter. But we'll see. Okay, this is it for today, and I'm gonna see you tomorrow or the day after tomorrow. Okay, bye bye.